IEX or Indian Energy Exchange is India's largest and most premier electricity exchange platform. It's worth around 12,334 crores, but the company has not been having the best of times, particularly the company's stock. As you can see, past year declined by 26%, not past year, past 6 months declined by 26.83%. And you can notice this one particular decline around July 15, 17, 30% decline in stocks from like July 16, 17 again till now. You can see a massive decline in stocks. And this was because of one thing and one thing only, market coupling. So we will analyze what is market coupling in like a minute or two. Okay, in a minute or two. Then we're going to analyze this latest phone call. Okay, earnings conference call IEX, where the management of the company, yes, the managing director, the CFO, basically the senior management of the company will talk about what they're going to do about this coupling. How will they be impacted? Now, their view can be biased because they are from IEX, but that is the best I can show the viewers. So, let's start with what is market coupling and then we will go to IEX. So, market coupling situation explained by Google AI mode because I can't explain it. Now, the market coupling is a centralized process where one single market coupling operator aggregates all buy and sell bids from every power exchange in India. So, power exchange in India, there are multiple, but IEX is the big player. So, they have their own pricing for the power of electricity, they have their own pricing. Now, market coupling is going to aggregate all of these buys and sell bids from every power exchange to one. They will have one pricing for all. They cannot, these separate power exchanges cannot determine their own price. One price. Okay. Current system is where each exchange, especially the dominant IEX, determines its own clearing price, buying and selling price. This will lead to a centralized price discovery and could lead to improved market efficiency because there will be increasing competition and efficient use. One price. What can be the impact? The impact can be erosion of primary competitive advantage. IEX's previous dominance stemmed from its high liquidity, which attracted more participants and enabled more efficient price discovery. With single price cleared, this advantage on higher liquidity, meaning higher market share, will be eliminated. Then, this shift in trading volume, uniform pricing, market participants. So, with one price across all exchanges, market participants will no longer need to favor IEX for the best price. This could cause trading volumes to be distributed more evenly among all exchanges. So trading volumes may decline. Okay, that is one. Keep in mind. We will come to how this will impact. This may impact how lower trading volumes may impact IEX. Then there will be a projected market share decline in terms of total volumes. Then lower volumes will lead to lower transaction fees because IEX's revenue, as you can see, is primarily based on transaction fees charged per unit of electricity traded. So one common price, maybe participants like its customers will feel that it no longer needs to buy electricity on IEX platform. They can buy on any other platform. So lower volumes, lower fees. And again, lower trading volumes, lower money, lower revenue, lower profits. Would this be IEX's decline? Can the company no longer hold up? Yeah, can the company no longer recover? So let's see. This is the phone call. And the main person who will be answering most of the questions is Mr. Satyan Narayan Goyal, who is the chairman and the managing director of Indian Energy Exchange. So let's see what does he say. Uh, hold up. Yes, here it is. Here we have the question and we have the answers. Now, question is this. So questions are being asked about coupling, market coupling. So congratulations on a good set of numbers. My first question is on market coupling. Could you refresh us regarding the advantages that IEX has over its competitors, which helped it to have a near 100% market share in the DAM? What is DAM? DAM is the day ahead market. So electricity buying and selling one day. I think like in a few days later. Then RTM is real time markets. You can search this on Google. day ahead market and the RTM market. Also, why the competitors were not able to replicate this, and if they would be able to gain market share now that the market coupling implementation. That's the question. Okay, what advantage can they possibly have now after market coupling? Answer by Mr. Goyal, the managing director. Yes, the IEX has maintained a leadership position in the day ahead market and RTM market over the years. In the DAM market, in fact, for the last 17 years, we have the leadership position. If you see initially, the other exchange also had some reasonable market share, 20-25%, but over the years, they even lost that. So competitors lost their previous 20-25% market share. Then today, they have more than 95% market share. And this has happened because of many factors. Not one reason, many factors. One, they have a very robust technology platform. Okay. Second, they've introduced new product ahead of the competitors. Okay. Then they regularly interact with customers. All right. They interact with the state regulatory commission. They are in the advisory board of more than 12 state regulatory commissions. Then they provide a lot of data analytics to their customers, and they have a web-based technology platform with the IT infrastructure being very robust. So, in spite of many cybersecurity attacks on the IX platform so far, there has not been a single penetration. And it's a sum together of all these activities in which they have been able to retain such a massive market share in day ahead market and RTM market. Now, important going forward, even after coupling, I'm sure we will be able to do all these activities and maybe even more to ensure that customers stick to us and customer loyalty is maintained. So I'm very sure that we will be able to maintain definitely a larger market share even after coupling. So definitely he's saying that all these platforms, technology, better product, they will still be able to maintain. So let's see. That is what the management said. I did not say management said it. Then next question. Thanks for the opportunity. So clarifications on the technology edge that IEX has and your other advantages versus competing exchanges are well received. But do you see competition using transaction fee as a tool to take market share in day ahead market in the post market coupling? So can there be a price war? Can a price war happen in terms of transaction fees? Will everyone lower transaction fees after market coupling to take market share? Answer by again, I think Mr. Goyal is we will deal with that when we reach there. Why to worry about that right now? I don't think customers really value that part because transaction fees is a very, very small component of the total power procurement cost. But if that is the case, we will deal with that. Okay, so he's saying that transaction fees is a very small part, very small part of the total power procurement cost. The technology and all, customer convenience may be a bigger part, and that is where IEX's advantage may lie. Okay, maybe. Next question. Based on the current status of technological progress that Grid India might have made, do you foresee January 26th timeline as being implementable? And when do you see the RTM also forming part of progress on RTM to come under ambit of market coupling? Now, one thing, so this January 26th timeline is the implementation of market coupling, but also for now, the CERC, basically regulatory body has said that this market coupling is only for the day ahead market. The day ahead market, it's not for the real time market. So for real time market, they have not given any clarification as to when this market coupling may be implemented for RTM. They have not even said right now that RTM will at a later date be sorry, that RTM will also come under market coupling. They have not said that yet. Only said DAM will come, and for RTM, clarification will come later as to whether market coupling will happen for RTM. So answer here. First of all, as far as the implementation of market coupling in the DAM segment is concerned, there are a lot of things to be done. One of the things is you need a common software for all the exchanges, the IT infrastructure for all the exchanges to be compatible. You need clearing and settlement mechanism. You have to work out that part of it. And in fact, also at the commission end, they have to formulate regulations for implementation of market coupling. All these things need to be done. They need time. So see, I will not like to comment on this whether January 26th is feasible or not. But based on the activities involved, I feel it may take longer time. That is for the day ahead market. And for RTM, the order, he's given out the order set by regulatory body. Given the shorter time for bid submission and running the market clearing engine, the decision to implement the coupling of RTM for power exchanges shall be considered at a later age. So he feels, the management feels, Mr. Goyal feels, or is it Miss Goyal? The management feels that all these things, the implementation of market coupling may take even longer than January 26, and currently RTM is not even considered right now. Okay, then I could read this about embed, but so if you want to know, there's a word mentioned here, embed in the order. Now, a gist of these questions about embed, I'm coming to what is embed, but he has said that there's no mention of embed in IB in the order, coupling order, whatever regulatory order was there. There is no embed mention. So, market-based economic dispatch is a proposed mechanism for a centralized electricity market in India. So, this will have a significant. If so, this is a proposal that for electricity market in India, there need to be a centralized system. So, like IEX and all that, they shouldn't even exist. There should be like one centralized system. But currently, this can have a massive negative impact. But embed is has never been mentioned in the. That's one thing that's consistent. Embed has never been considered in the order. Okay, let's just move on. Uh, hold on. Yes. Then this is a statement. This, of course, is an answer of a question, but I thought why to include the question. Statement. Price discovery is the key function of exchange. And one of the unique selling propositions of IEX has been that in the last 15 years, there has been no questions based on the price discovery of IEX. We display all market data on a website. We display the price discovery curves, and no issue has been raised with anybody till so far because that shows the robustness, the technology platform, and a price discovery process. Let us see what happens after coupling. I would not like to comment anything on this at that stage. Now, yes said. So market coupling happens, and we suppose the worst case scenario that all the participants or the customers will no longer feel the need to go to IEX platform because of common price. But he is saying that price discovery, that a good price, the best price, finding the best price. IEX, there has never been a problem for customers to finding the best price, meaning customers who are with IEX have always found the best price to be with IEX. So he's, I think, saying that because price discovery, finding the best price has never been the problem for IEX. Even after market coupling, why should there be a problem? Yeah, all the exchanges, one single price, but why should that be a problem for IEX? Because IEX, according to him, never had the problem of not having the best price for the customers. That's what he's saying. Then let's move forward. Another question. So, is this something that will be very difficult for the competition to replicate in terms of, or can they do over time, let's say 2, 3, 4 quarters, they will be able to invest and replicate the technological advantage. So, he's asking that will competitors be able to overcome this technological advantage over IEX? Now, pretty W answer, not gonna lie, pretty gangster answer by Mr. I think the management, Mr. Goyal, that they had 17 years to replicate this. Yeah, not gonna lie, that's pretty hard answer. Okay, that this statement goes pretty hard. Not gonna lie. Okay. Finally, another question. Although it's difficult, much difficult than that, right? So one final question: if we were to assume that with market coupling, if we have to sustain a market share of more than 40-50%, then what would be the key advantages that would sustain to having that higher market share compared to competition? Now he's asking this. The answer by management is that Devesh, we are working on these strategies and we will let you know in the due course of time. I can assure you one thing, we're not working on retaining 40-50% market share. We're working to retain the present market share. So they earlier said definitely they will be able to retain a significant market share. And right now they're thinking they will be able to attain all of the market share. They're trying to attain, sorry, not able to. They're trying to attain, doing all they can to attain the current market share. So this is a number of questions and answers. Let's read. So the competitor systems and our systems won't be the same. So if a user is comfortable with a platform, what incentive would he have to shift to a new platform? Okay, he's asking that. So our answer is C. Regulator will have to decide about the common platform, the common software, and also the IT infrastructure across all three exchanges to be compatible. So these kind of things can be done only after that. So regulator is thinking of having a common platform. Then, uh, yes, hold on. Okay. So these like common systems, common software. These are the requirements for market coupling. This is all being said. So if you want to know, you now know that a common software, common IT infrastructure, common software, and what is a common platform needed for all of this. And then, and so my question is on the competition. What steps is apart from reduction in transaction fee can the competition do to what steps apart from reduction in transaction fee can the competition do to attract customers? Is it something like reducing subscription fee or margin requirement? What stops them to invest in better technology and people? So again, what can IEX do to maintain its market share? Answer number one, I think this is a very important statement. The present order is for coupling of DM market, and DM market constitutes only 35 to 40% of total volume. So we still have almost 60 to 65% volumes coming from other products. Then, in case and even in case of DM market, except for the price discovery, the other part of technology platform, technology services, customer services, market development activities, which will continue to do so. And I'm sure that will basically ensure that we retain the leadership position. So DAM is only 35 to 40% of the total volumes. And even there, he's saying that the transaction fee is very small. Price discovery is one component. The technology and customer service experience of customer is another component. So yeah, I think one more thing. He has said, the management has said, product development is a continuous process. 5 years back, we had only one product, the day ahead market and the term ahead market. Aren't those two products? Now today, we have so many products available. So in the future also, there's a continuous process. They've already filed petition for the green RTM market and a petition for peak power. 11 months contracts is already with CERC. So it's a continuous process. In due course of time, and as and when we find that there is a need of a new product in the market, we will take that up. So that is the closing sentence. They're saying earlier they had like two products, and now they've continuously introduced new products which have contributed a lot to the revenue. Now, again, day ahead market and term ahead market is day ahead market is 30-35%, and that was a product, that one of the two products or one product 5 years ago. Now, 60 to 65% of the volumes are coming, 60 to 65% of volumes are coming from something that is not day ahead market, okay, and not, I think, term ahead market. So they're introducing new products which have maybe shown in history, they've actually shown that these new products are able to contribute to revenue and they will keep introducing new products. So that was it. That was IEX. So overall, management seems confident. It seems from these statements, they're confident. And as a summary, it seems that this common price, it's like this common price, it may not be an issue. If market coupling leads to a common price, I think IEX, the management feels that the technology, that the customer service is more than enough to retain its market share. And you know what? Why not show the profit and loss of the company? This is the profit and loss from 2014 to 2025. Top number is sales, we got operating profit, we got operating profit margin. Look at this operating profit margin. 80% is insane. Okay, insane. 2025, sales of 535 crores, 85%. 85% operating profit margin is again insane. And look at this. Look at this interest expense. Look at this depreciation expense. It's negligible. Look at this. Look at these two numbers. 3 crores worth of interest, 21 crores depreciation. And overall, compounded sales growth, 12% over the last 10 years. 12%. Pretty solid. Compounded profit growth, 18%. outpaced the sales growth. You can see that. So very nice, solid numbers. A return on equity again very consistent, very nice, 42%. So let's see what IEX can do in the future. And 20 minutes video has been done. Bye.